Hello, my name is Edward Robinson, a legal director in the corporate team at Charles Russell Speechlys. As part of our new FIC Files series on family investment companies, commonly known as FICs, today we look at what assets a FIC can hold and what the wider implications of this are for FIC structuring. As mentioned in episode 1 of this series, as a matter of law, a FIC is just a company, so it can hold anything which any other company can hold. This most frequently includes cash, loans, shares, investments, property, investment interest in a family business. But broadly, this is extremely flexible, so that the FIC can act as a wrapper for most investments which an individual wishes to contribute to the company or want it to invest in. However, there are some asset classes where care needs to be taken to avoid additional tax charges, and Tabitha will explain a little more about that.
A FIC is not an appropriate vehicle through which to hold UK residential property unless it is let to a third party on a commercial basis. This is because in this scenario there would be charges under the Annual Tax on Envelope Dwellings, ATED, which depending on the value of the property can be substantial. There are also higher rates of SDLT, 17% from 31st of October 2024 on purchases through a company, subject to any reliefs available.
One type of investment which interests many of our clients is the ability of the FIC to make investments in family businesses. The value which sits within the FIC often represents a significant proportion of the family wealth, and part of that can be utilised as seed capital to encourage the next generation with their own entrepreneurial ambitions. Our entrepreneurial clients know how difficult it can be making a start as a new business, and rather than a handout or outright gift, want to position this as an investment. This has two key advantages for the family. Firstly, by structuring this as a formal loan or equity investment, it means the family member who wants to set up the business needs to justify this with a robust business plan and forecasts. And we have some clients who will require their children to prepare a business case for the independent directors on the board to properly stress test the plans, albeit in a safe environment. Secondly, if the business does well, then the FIC, and by extension the wider family, also participates in that benefit. This sort of investment is not relevant for all families, but showcases the flexibility that you can have with a FIC and how this can be tailored to the individuals involved and their goals and aspirations for what is to happen with this family wealth.
FICs offer a great deal of flexibility, not only in their structure, but also in the assets which the FIC can hold. As we have mentioned, care does need to be taken, particularly around property assets, to avoid unwanted tax costs. Working together with other professional advisors, we can assist in putting together an asset structure which works for the individual and future generations. Thanks for watching, and look out for future episodes in our Family Investment Company series.